Hi, morning all. Welcome back to Morning Kappa. Happy to see you guys again. Right, so if you look at the S&P 500, well, it closed slightly higher at 6,915 points on last Friday as investors ignored the Intel 70% crash. Well, it's triggered by the weak outlook, right? Also choosing instead to buy the Nvidia and also Microsoft to keep the AI exposure on the AI team. So I think sentiment was still supported by the PMI data, which came in solid, confirming that the economy is still expanding without overheating, which also keeps the soft landing story alive for 2026. So I think um, also, do note that over the weekend, President Trump has warned Canada that it will strike 100% tariff threats to Canada if it strike a deal with China. So yeah, the drama hasn't over yet for now. So I think with that, you expect uh, the cautious start um, for the week today, right? While the trend is up, the overall trend is up. The Intel short has made the traders nervous about the upcoming earnings from we have Apple, Amazon, right? Later this week. So yeah, for now we still see that 6,950 points resistance as an immediate cap for the index, right? So moving on to China A50 futures, well, it dropped to 14,782 points on last Friday as the Shanghai and also Shenzhen exchange announced a crackdown on speculative trading. Punishing hundreds of account for price pumping, which overshadowed the PBOC 700 billion yuan liquidity injection. So yeah, the sell-off was excavated over the weekend by the President Trump new threat to connect Canada, which renewed fears that the China-friendly nation export strategy is under attack. So, I expect a further volatility at opening on for today's session as the weekend headline regarding the U.S., Canada, and also the China tariff threats add geopolitical pressure to the existing regulatory fears, right? So, for today's Hong Kong trading stocks, we have Laupu Gold, stock code 6181. So the stock is on its breakout formation and breach above the 750 Hong Kong dollar resistance level. And if the bullish momentum to remain steady, we can expect that the price to test the next resistance at 850 before it climbed higher at 930 Hong Kong dollar level. And now, if the momentum to reverse, do make sure to have a stop loss at 690 level, as it could indicate a possible change of trend, which also might affect your trade. So, and next we have Guangzhou Technology, stock code 1024. So if you see here, the stock is now eyeing to climb higher after after the rebound. And now with the price able to continue to maintain higher, it may reach or breach $82 level before it might propel higher towards this 90 Hong Kong dollar and 98 Hong Kong dollar level. So a reverse below 75 support will open the door for a deeper correction, shifting the trend. So looking at the WTI crude oil futures, close to 61.30 dollar on last Friday as the President Trump warned about the U.S. Armada, right, heading to the Middle East and slapped a new sanction on the Iranian oil vessel, which also sparked fears for the blockade or the conflicts, right? I think buying accelerated due to the seasonal factor, panic as well over the winter storm is expected to spike the heating oil demand and also potentially freezing the production for Texas repeating the 2021 supply crunch. And for those of you trading WTI futures, right? Expect a potential spike up during you know upcoming sessions to test the $62, which in line. I mean, it's our first resistance. Well, if demand expands further, this should breach the $62 level and travel higher towards the $65 dollar level, right? So looking at the Malaysia market, well, the KLCI hit new high at 1719.99 points on last Friday as the late wave of buying into plantation stocks and also banks erased the early losses. So I think investors are positioned for the strong um, uh, pre CNY rally driven by the rising CPO prices. Also, Velasco Energy remained the most active stocks with the crude oil price uh, uh, surging over the weekend, and also the energy sector is expected to lead the market higher on today's session. All right. So expect the energy sector, like we have here, right, hibiscus, Velasco, Usman LFG to continue its bullish follow through on today's session following the 3% jump in WTI crude, and also the index looks to set higher to test the 1725, all right, the immediate resistance, provided that the China's weakness doesn't drag the sentiment down. And also for the FKLI, right, as it mirror the KLTI, well, sentiment remains positive. Also, if I mean, also it is set to test higher towards the our first resistance at 1730 points level, and we keep our positive trading bias unchanged. Right, so talking about Velasco was the active gainers last week. I mean, yeah, this is the chart that I showed to you guys last week. So if you see here, it went up and closed above this 31 cent level now, right? So what's next? What's next, right? So yeah, looking at the volume right here, one of the trick in terms of technical analysis that we have to monitor for the spike in the volume, and together with a solid breakout for a confluence and also for a confirmation. Yeah, so now that we have a confirmed bullish breakout, again, let's aim for the 34 cent level and also 36.5 cent level for the resistance. But yeah, we do not discount for any correction to happen before the next impulsive wave, right? So tomorrow I'll be having my monthly Bahasa Technical webinar. So if you want to join and interested to know more into introduction of affiliate wave, so let's register and join in, right? Yeah, for our Malaysia trading stocks, we have IHH Healthcare. So it is on its breakout formation higher at 8 ringgit and 55 cent level on a strong volume. So with that, we expect the momentum to keep bullish and start able to propel higher towards the next resistance at 8 ringgit and 95 cent level, followed by 9 ringgit and 30 cent level. So if the stock breach lower or to clear lower at this 8 ringgit and 20 cent support, this could reverse the course and also trend lower. Next, we have a Pentec Group. So the stock is experiencing a breakout as well at 69 cent level. So if the stock remains bullish, we are expecting that the price to reach the 73 cent in the coming session, together with a high volume. Our second resistance is at 77 cent level. So keep an eye at the 66 cent support for any attempt of reversal. Yeah, so today we have 4 trading stocks, and thirdly, we have Gas Malaysia. So the stock is on its pending breakout formation at 4.55 cent resistance. So with that, we expect the momentum also to remain bullish, and the stock able to propel higher to test the next resistance at 4.70 cent, followed by 4.85 cent resistance. Do keep an eye at this 4.40 cent support, and finally, now that I mentioned just now, we have a slight positive move in banks and also the FI sector. Yeah, we have also Eon Credit in the stock pick, right? Okay, so the stock has reached higher at 6.05 ringgit level. With that, we expect that the price to continue to propel higher towards this 6.40 ringgit, followed by 6.65 ringgit resistance level, right? So for now, support is back at 5.80 ringgit level. All right, so we have we have three breakout stocks and one pending breakout stocks, which is Gas Malaysia. Right, so looking at our, the FCPO, well, it pulled back to close at 4175 last Friday as the profit taking kicked in after the ringgit surged higher following the last week's BNM decision to keep rate steady, which also hurt the export competitiveness, right? So despite the Friday dip, right, the correction, I think the overall trend remains bullish. The market secured its, uh, third weekly gain, right, supported by the shrinking in the production and also strong export data. So expect the bullish move to kick in for today's session, driven by the rally in the crude oil over the weekend, and also the surge in the energy prices increases the biodiesel appeal, likely overpowering the strong ringgit factor, right? So for now, we still keep our resistance at 4,240 ringgit for the immediate cap, and also 4,300 for the next resistance. So stop loss remains strong at 3,900 level, right? So I'll stop here. Thanks everyone and happy trading. So I pass the floor to the next presenter. Thank you.
Thanks, Aiman. Let me share my screen first. So, morning everyone. Thanks for joining the call. So you can see that our risk sentiment index has pointed slightly upward in the recent print. And also, there's some marginal decline from the risk-taking perspective. So we attribute this to be linked to a Trump tariff related. So as pointed out by Aiman earlier, that Trump has threatened Canada for imposing 100% tariff if they continue to have a issue with having a deal with China. And also previously he has also imposed a tariff on European countries by 10% in Feb, also which will raise up to 25% in June. So unless they allow the sailing of Greenland to that from Denmark. So however, this has been cancelled and pulled back by Trump after they realized that this cannot work. And also for now, we see that most of these tariff still remain a bit complicated. They're trying to figure it out what's the way, and this could trade the market risk on that. So moving on, we still look at some issues. This is the context on that, and moving on, we still look at keeping our asset allocation strategy unchanged, which is overweight on fixed weight on equity, market weight in fixed income, and underweight in cash. So we think that this generally investor have decentralized from the tariff threat. They will continue to buy on our dips strategy, and also they will see some insurance bets on the safe haven demand, which could be observed in coming week. So we think that most of the risks are jawbreaker in the nature and remain a black swans even if tensions escalate beyond the current circumstance. So other than that, we will move on to China. if you look at China GDP as a fourth quarter, we can conclude that 2025 growth is around 5%, and we see there's the rumors for 2026 to be 4.5 to 5%, and we think that this is likely to slow down according to our base case for 26 to toward 4.5%. However, we still see some mixed signals coming from the high frequency data from China, including the retail sales, industrial productions, and so fixed assets. So things could be quite unstable for China economy, but we still see investors still penciling a cut around first half. So China economy could see some slow momentum. On our Malaysia side, as I discussed earlier, what happened in US and also EU could trigger a negative impact on our trade. So totally on a 12-month rolling basis, we could see some 32% impact on our total trades, including 54% of the exports in the telecommunications, also 75% on the vegetable oil, which is palm oil. So this trade tension could raise some impact on Malaysia. So that's all from me. Happy to pass on to next speaker. Thanks.
Okay, thanks, Xian Yong. Hi, morning, everyone. For this morning, we have a update note on CIMB. This is following its usual pre-close period meeting that they have last Friday. Now, for the upcoming fourth quarter results, our full year 25 net profit of 7.7 billion ringgit implies that the fourth quarter net profit is going to be down Q on Q. We expect this to be down on lower non-interest income, as well as the seasonally higher overheads, but cushioned by lower loan impairments, while year on year, the quarterly profit could be flat. A couple of points from that meeting. Firstly is the seasonal deposit competition, where, in the past, deposit rates tend to rise in the fourth quarter because of banks competing to close the full year. This time round, management said, the competition is no different from that in 4th Q24. But there were some positives that management highlighted. Firstly, it managed to pick up some deposit volume during the quarter, but the rates were actually quite similar to the rates it paid up in 4th quarter 24. Secondly, there was a quicker normalization in wholesale deposit rates. Normally, it takes about 1 to 2 months after the year end for the wholesale deposit rates to go back to normalized levels, but this time the rates have already normalized. And thirdly is that, the OPR cut earlier, that started to impact the deposits. Regionally, Indonesia's improved liquidity situation was sustained, but there was some one-off that impacted margins in the third quarter, so you don't have that in the fourth quarter. So Indonesia's margins are going to be down Q on Q. But in Thailand and Singapore, they started to enjoy, deposits have enjoyed the impact from the sharp drop in the benchmark rates, and you'll see lower deposit rates this quarter. Elsewhere, on the loan side, there was good corporate loan wholesale banking pipeline drawdown in Malaysia during the quarter. In Indonesia, similarly, the corporate banking, there was pretty good demand, but corporate banking in Thailand was a bit soft due to repayments and a weaker demand there. In Singapore, wealth-related financing plus commercial loan demand was pretty good. On the non-II side, as mentioned, we're expecting this to drop, and this really, is a reflection that in the third quarter, they reported very strong non-II. This was due to the trading and FX side and also the NPL gain sales. This is going to be more normalized this quarter, and hence, we are expecting a bit of a softer non-II in 4th Q25. And the last point on asset quality is really no major issues there. Asset quality trends are either stable or improving. So, when they report, when you look at asset quality metrics, when the results come out, no negative surprises expected on that front. If you recall, they announced a 2 billion ringgit capital return plan in the third quarter. For this, management said they're going to be flexible on the timing of the returns, which is expected to last all the way until 2027. But the preference really is to front load the returns so that that will help them manage the ROEs. Management is optimistic about achieving the 12 to 13% ROE target in 2027, supported by Malaysia as well as Singapore, plus some capital management impact. So all in, no change to our forecast now pending the release of the full year results. We still keep our buy, call and target price of 9 ringgit. Okay, I'll pass you to the next speaker, Adam.
All right. Good morning, everyone. Today we have an IPO note on Ming Group, who will be listing on the eighth market with an indicative market cap of 123.5 million ringgit. Ming is actually planning to raise to about 20. Let me just check. Yeah, it's planning to raise 25.3 million ringgit from the IPO. Primarily for working capital and business expansion. So Ming is actually involved in the provision of mechanical and electrical engineering services, covering your your high to low voltage installations, along with some photovoltaic installations, and also your mechanical type of things such as your air conditioning and cooling systems. In terms of the revenue breakdown, bulk of it is coming from industrials at about 70%, followed by commercials at 14.5%, and later on your residentials and your clean energy. And also in terms of geographical contribution, Perak is the largest contributor at 44%. It is a Perak-based company and will continue to reap a lot of opportunities from Perak, which I will explain later. Penang contributes 36% of revenue, Selangor at 8%, and Johor at 4%. And it currently has about an outstanding order book of 176 million ringgit as of 31st December of 2025. And in terms of tender book, it has around 700 million ringgit. And we expect win rates to be about 15%, so that's roughly about 110 million ringgit of potential wins for FY27, and we expect FY28 to see higher level of wins at about 140 million ringgit. In terms of valuations, we are valuing the company with a target PE of 11 times based on its FY27, back to its FY27 ES, to derive a fair value of 52 cents. This 11 times target PE is at a discount to the major contractors like Gamuda, IGM, Suncon, Binastra, and Kejaya Prospect, which are also involved in your industrial, residential, and commercial buildings. And we think that moving forward, Perak should continue to set a lot of potential opportunities for Ming, given that the state recorded 6.3 billion worth of investments as of June of last year, which is a 105% year-on-year increase. And if you see that there's already a lot of industrial parks in Perak and or upcoming industrial parks such as the Korean Integrated Green Industrial Park, you got Lumut Maritime Industrial City, Silver Valley Tech Park, and the Automotive High-Tech Valley in Tanjung Malim. So we view that would continue to provide more opportunities. So that's about it for Ming's IPO note for today. I'll stop here, and thank you everyone for dialing into today's Bargain Morning at Kappa at 8. We'll see you tomorrow at the same time and same place. Have a great trading day. Bye-bye.